So the word sale has been substituted by the word transfer. I'm going section by section, of course. Next section, a new subsection inserted under section 2, that is called section 2 clause 47A, which is virtual digital asset. The concept of virtual digital asset may not be known to me in detail, but of course everybody talks about cryptocurrency, but this is nothing but, there's not only cryptocurrency, it is many things. So the definition given in section 2 clause 47A is very well. Cryptocurrency means any information, any token, any information, any code, any token, any what you call number which has been generated by crypto means, which has been done by, I'm not very technical in that word, crypto means, crypto means which has been generated. That is also called as cryptocurrency. So it is not only currency, but does not include Indian currency or any foreign currency. But this has been generated. That is mining is done. Generated, the asset may be of any kind. It can be a token, it can be a code, it can be information, it can be what you call any number which has been generated. And you have one more word is very called fungible. Fungible token also is also the word which is used in that. So I don't know that technical things in 247A, you please read that. But that, of course, is the definition given. Now, this is an income. How do you get this? How do you tax it? They have inserted section 115 BBH. They have inserted section 194S. They have inserted section 56 subsection 2. Some amendment has been made in section 56 to 10, all because of virtual digital asset. The meaning is given under section 2 clause 47A, but I am coming to 115 BBH, which has been introduced with effect from assessment year 23-24 as the 2023-24, which says where the total income of an assessee includes any income from the transfer of any virtual digital asset. Are you understanding me? Your total income includes income from the transfer of any virtual digital asset. Then such income shall be taxable at the special rate of 30% under section 115 BBH. And the clause B says, and all other total income will be taxable at normal or special rate given under other sections. But what I'm trying to explain, they have said now profit or gain from cryptocurrency is going to be taxed under special provisions of 115 BPH. Somebody was asking, under which head you will take the profit on the sale of cryptocurrency? Will it be taken under capital gain? Answer is no. If they had taken it under capital gain, they should have amended the definition of capital asset under section 2 clause 14. They have not done. And if they had taken it as a capital gain, then they would have talked about short-term capital gain or a long-term capital gain. Then nothing has been talked. It is not a capital gain. It is not a salary. It is not house property. It cannot be called a business income. They have treated it under the head income from other sources. If there is no, it doesn't fall under but first 4 heads, it will fall under the residuary head. So that under residuary head, whatever is the income from the cryptocurrency is going to be taxed at the rate of 30%. But they have added that. Please note, no deduction, no expense, except what you call cost of acquisition of that virtual crypto asset. No setup or no allowance will be allowed from such crypto income from which is earned on account of virtual crypto asset. So you will not be allowed any expense except expense on the cost of acquisition of that virtual digital asset. You will not be allowed any loss. You will not be allowed what you call setup under any provisions of the Income Tax Act. And secondly, no loss is allowed to be set up from any other provision. This loss is not allowed to be set up any other provisions of the Income Tax Act. You will not be allowed to set up this loss at all. And no loss of any other provision can be set up on this crypto income. So crypto income without setup will be taxable. Now, one issue which is very important. Yesterday, I was discussing with somebody said, suppose there are two transactions of crypto, virtual crypto asset. One transaction you have income, another transfer you have a loss. Will that be allowed to be set up? According to me, that is one of these two transactions. You have to calculate the income from crypto, virtual crypto asset. So it is not to be calculated transaction wise. It has to be corrected the total income, which is included in the total income. So my point is, yes, one loss, another loss, a profit under the crypto virtual digital will be allowed to be set up, but no other loss, or you can't set up any loss under any other provision of the income tax from this crypto income, or this loss cannot be set up. And thirdly, this loss will not be allowed to be carried forward. If there is a loss on account of crypto, virtual crypto asset sales, the loss will not be allowed to be set up at all. That will be a dead loss in that case. You can't be carried forward, and you will not be allowed to set it off also. This is 115 BBH. Now, the point is, this is a transfer. And when there is a transfer, how do the income tax will know there is a transfer of the cryptocurrency? So to monitor that, they have brought a section under the provisions of TDS, like section called 194S, which says every person responsible for making a payment of consideration for the transfer of virtual digital asset shall be under an obligation to deduct tax at the time of credit of such consideration to the party, or at the time of payment of such consideration, whichever is earlier, and the tax has to be deducted at the rate of 1% of such consideration. It's 1% of the consideration, not 1% of the income. 1% of the consideration tax will have to be deducted in that case. The tax will be deducted at 1% of the income. That was the point. Now, sometimes what happens is that you are getting a consideration in kind, or you may be getting a consideration in the exchange of another crypto asset, or there may be an income partly given, the income is partly in kind and partly in cash. So what will happen about the TDS in that case? The law says you will have to, if it is only in kind, you will have to see that tax has been deducted, like lottery income. Suppose a car, you win in a car in the lottery income. You have to ensure the tax has been deducted on account, or you have to collect the tax from that person who's winning that lottery, or where. Similarly, who's winning that, you will have to collect that person because it is in kind. And when partly in cash and partly in kind, then if the TDS amount is more than what is cash, then also you will have to ensure that the TDS has been deducted and deposited in that. Then they have said provision of 203A and 26AB shall not be applicable. What is that 203A? That there is no requirement of TAN. For depositing this TAN, there is no requirement of TAN. And secondly, 206AB, they say that there is no need to deduct the tax, twice the rate, whatever is there. If you have not filed, that also section is not applicable in that case. That section is also not applicable in that case. So one has to be very clear. The next point they have said is that when you are, it's okay. So my point which I wanted to say is, another point is, when you are deducting this tax, it might have been credited to any suspense account or any other account, whatever name called, it does not make any difference. You will have to deduct the tax at the rate of 1%. At the rate of 1%. And the point is that there is no tax to be deducted if the payment made by a specified person does not exceed 50% during the financial year. Please note the word by a specified person. The person who is buying that, the crypto, that he has to deduct the TDS. Who has to deduct the TDS? The person who is buying that. Right? This buyer of that area, if he is a specified person, if it does not exceed, the amount does not exceed 50,000, no need to deduct TDS. And in other case, only 10,000. What do you mean by this 10,000? A specified person is only individual or HUF who is carrying on a business, but his gross turnover or gross sale does not exceed 1 crore, or if he is carrying on a profession, his gross receipt does not exceed 50 lakh, then in that case, it is 50,000. If it is more than 1 crore or more than 50 lakh, it is 10,000. For company, it is 10,000. For only for individual HUF who is not required to get his accounts audited, that means whose turnover does not exceed 1 crore, or his professional income does not, the gross receipt does not exceed 50 lakh, or he is not carrying on any business. He is an individual HUF but not carrying on a business. In that case, the limit is 50,000. But in any other case, the limit will be 10,000. So one has to be very careful that the no deduction 50,000 only in case of specified person. In all other cases, 10,000 rupees. No TDS to be deducted. All other cases is 10,000. And please, the government may come out with certain guidelines in that with the approval of the parliament, and that guidelines will have to be placed before the table of the parliament. That point I have also said in that case. So this is 194S, which is there. I'm telling you for deduction of tax at source. Now, what can happen is somebody has a virtual digital asset. If he is transferring that asset without any consideration, he is not, I want to give this crypto asset to Shivam Ahuja, son of Mr. Arun Ahuja. If I want to give to him, he is not my relative. Mind it, he is not my relative. So will that be taxable in the hands of Shivam Ahuja as under section 56 subsection 2 clause 10? Because earlier if you use the word, what is taxable under section 56 to 10 is immovable property or movable property. The definition of movable property is given in section 56 subsection 2 clause 7 in explanation that says movable property includes shares and security, jewelry, archaeological collection, drawings, painting, sculpture, work of art. But under section 56 to 10, they said, what is the meaning of property? Earlier it was different, given in 56 to 10. Now they said under 56 to 10 explanation they have added, the meaning of property will be same as given in 56 to 7, but shall include virtual digital assets. Are you getting my point? What I'm saying? The property, movable property as per section 52(7) read with 56 to 10 means, I said, shares and securities, jewelry, archaeological collection, drawings, painting, sculpture, and bullion. Nowhere I've used the word virtual digital asset. But when I come to 56 to 10, they have said meaning of property will be same which is given in section 56 to 7, but it will include virtual digital asset. Meaning thereby, if I give this virtual digital asset of a value more than 50,000 rupees, and it is given to Shivam Ahuja, he will have to pay tax on that as a gift without consideration. Of course, he will have to pay tax on that. That point has to be kept in mind. This they have inserted, and they have not done anything. They have used the word property means there and includes the virtual digital asset. So be careful about that. They will change, but actually written virtual digital asset. But if I had given that property to my brother, to my sister, to my relative, which is given under section 52(7), then that virtual digital asset which he receives will not be liable to tax even if it is received under a gift. Are you getting mine? So that gift, or when on the occasion of marriage, or all those conditions are there. Only condition is if I give to unrelated person and the virtual digital asset value is more than 50,000 in a previous year, if I give to him, then it will be definitely taxable in the hands of Shivam Ahuja under the income from other sources. So this is also the point for crypto. What normally people are talking about cryptocurrency, but let me tell you, it is not only cryptocurrency, it can be any kind of virtual digital asset. You might have developed something and you have sold that thing to some other person electronically. Who will come to know? So that is the reason they have said the TDS will have to be deducted. TDS will have to be deducted by the buyer, provided it exceeds 50,000 rupees or 10,000 rupees as the case may be, and the TDS to be deducted in the rate of 1%. Clear, sir? Any doubt? Anybody can help me out if I miss something, because I have the state of mind. I'm not in full state of mind. So I might miss something. That is the point I wanted to say. So this is, I don't want to use the word there. There are certain